I muted myself. What's going on, everybody? JT here. David with Crypto for Change. C. Will. We have a wonderful episode today. We've got the great Mark Yusko on board. He is the founder of Morgan Creek Capital. We have a lot to discuss. The title of the video is Crypto Winter Over? We're going to get into that. But first, we have a great giveaway. We're going to do a M-Algo giveaway, which is a liquid governance on Algorand. So, David, I'm going to let you take this one away, and good luck to everybody in our audience.
Yeah, so thanks for everybody joining in. Obviously, we've had a great slew of guests the past few weeks, so we're going to keep that rolling with some amazing giveaways as well. So head on over. You're going to want to head on over to our Twitter. I just posted a tweet from the next block, and the rules are going to be on there. It's pretty simple, though. All you got to do is follow Messina1. They are a protocol, a bridge for the Algorand ecosystem, and they have the new M-Algo liquid staking for your algo, so you can earn that passive income for governance. And so we're partnering with them to give away 250 M-Algo, 50 M-Algo to 5 winners. And all you got to do is follow them, like and repost the tweet, and share a screen grab or a screenshot of you depositing at least 100 algo into liquid governance for this governance period. So head on over to the Twitter, knock out those steps, and we will be announcing winners and dropping that M-Algo to those winners. So let's get it.
Let's get it. Y'all. Awesome. Yeah. Good luck. And be sure to like, be sure to subscribe, and hit us up in the live chat with any questions you have for our wonderful guest. And without further ado, let's bring on the great Mark Yusko. How you doing, Mark?
Hey, guys.
So Mark might be a little laggy. He's in a Vegas hotel that may or may not have Wi-Fi, but we're going to try to trudge on through and see what happens. But yeah, so appreciate you coming on the show, Mark. How you doing? What are you doing in Vegas?
Yeah, doing great. Other than I will name names. I have Wi-Fi in the rooms. It's unbelievable. I know there were stories years ago where the Win had like cell phone blockers, so you had to use their landlines and pay the egregious. I don't know why anyone would not have Wi-Fi everywhere, but crazy. So I apologize for the lagginess.
It's all good.
Yeah, absolutely. It's totally fine. Let's dive right into the topic of the day, because there's a lot of positive sentiment in the crypto world, which is rare these days. I haven't really seen much of it in the last 2 years. So is crypto winter over, in your opinion? Where are we in this market cycle?
Long time ago, and spring even ended in June, and I think through summer. The problem is people don't really understand these forces. Is the downdraft, right? That's where the wipeout happens. That was the down 74% for, and a lot of other things get. It's not like immediately back up. It's really, as spring is, cold and rainy and a little bit of windy. And so you just kind of bounce along the bottom and but you stop going down. And then summer is where people start enthusiastic again, and you get a slow drift up. So if you look, over the past year, we've really had this kind of slow and everything, but there's been some nice, but interest is coming. And actually, the reason I'm in Vegas, I'm at the Filecoin event, and it's amazing compared to last year. I mean, 20% as many people, but the people who are here, super talented, super excited about building things, and of positive energy, even though there's fewer people. And it's interesting, permissionless a couple weeks ago as well in Austin, same thing. Numbers were way down. I mean, like off the charts down. Yet the people who were there were really focused on, it was very different than, the Bitcoin conference, right? The big recent numbers, but so many of the people are literally individuals who may have been speculating in Bitcoin, but they're not really builders. They're not really engaged in that community. They're not developers. Here, I spent last night at dinner with developers, like talking about projects. And I'm not a techie, so I kind of try to play catch up. I'm a financial services guy, but it's really, as an investor, super exciting to hear the enthusiasm and the positive energy around what people are able to build. And it gets me pretty excited for fall. In the 4-year 4-season cycle is what you really want. Fall is where you get the big parabolic moves. It's what happens post halving. Halving does is it catalyzes movement. And if you think about it, it's hard coded that the block rewards get cut. So if you think about it, if you're a miner, if you're one of the people securing the proof of work network, your costs are fixed, electricity, machines, and now your revenues just got cut in half. Wait a minute, I'm out of business. Well, what happens historically is the price rises. So the fair value of the network actually adjusts to reflect the fact that you got to pay your miners to the network. Well, that movement, interestingly, attracts people, particularly guys. I talk about this all the time, right? We're hunters at heart, and we see movement. Like, you're sitting, you're with somebody and somebody moves or somebody goes by. Your eyes follow it. It doesn't mean you're not happy who you're with. It's just, that's what happens. And I joke, if it's not moving, I can't see it, right? You ask me to go find something in the fridge. If it ain't moving, I can't see it. So brings into the markets, and that caused a bigger increase, and it brings capital and interest and media and attention. And so that built-in mechanism to move prices. And look, if I'm a former wrestler, I wrestled in high school, right? Glory days. But I enjoyed it. And my coach had this great line: the head goes, the body follows. So if you push someone's head to the left, they're going to the left. You push them to the right, they're going to the right. If Bitcoin surges because the halving cycle, everything else is going to kind of come along with it. Now, everything else that's good, right? Bad stuff, scammy stuff, yeah, that probably should die. But good stuff will come along for the ride. And then people who really develop. And I know you guys have a lot of Algorand fans, right? And I'm kind of psyched. I had this experience where a couple of weeks ago, I was doing something on another podcast, and they asked me specifically about Solana. And I said, look, I made a lot of money in Solana. I actually kind of like Solana. I was hanging out with Kyle last night, and he's the reason we got into Solana. And I said, but I sold a lot, and I got concerns. And he said, well, what are your concerns? I said, well, my understanding, and again, I'm not a technician, I'm not a computer scientist. My understanding is it's not 100% accurate. Right? So if you're doing accounting, you need 100% accurate. And they're like, well, that's been fixed. I'm like, oh, okay, so it's been fixed. And what I said, and this is kind of funny, I said, in the past, people would put a transaction out and there'd be an outage and it wouldn't settle. And so I used the word vaporized. Oh my God, people got so pissed off. They're like, oh, you're an idiot. That never happened. Nothing got rolled back. I said, I didn't say it got rolled back. I said, it never actually got into the chain. So now I said, but that's been fixed. I said, well, you tell me it's been fixed, but we don't really know.
I've actually seen people. Yeah, I've actually seen people who were doing transactions on Solana, and obviously they were comparing. We follow a lot of people in the Algorand ecosystem. They were doing them side by side with Algorand transactions, and they weren't failed transactions from Solana, but you were getting a lot of I guess they would be considered failed or delayed. Like, they would say like, oh, try again. And then like, there was way more red X's that would pop up when trying to send. And this is from a wallet to wallet. This isn't, a Coinbase account to somewhere. This is just, a straight Solana wallet and using an Algorand wallet. And you really, have that intermittency with still Solana, even though it's fast. I mean, it's, it claims to be fast. Obviously, even I think the, Circle CEO has been touting how fast, settlements for USDC can be on Solana. But at the end of the day, they're still, to me, Solana's still in beta. Like, they're still not even fully fledged. And yes, they've had, I think, 6 months, maybe 3 to 6 months of consistent uptime. But you still have to take into effect that we're in the bear market, right? What's Solana going to look like in the bull market when there's a lot of activity? And I actually wanted to get your thoughts on this because we've still seen some of the biggest networks. You have Bitcoin, Ethereum, Solana, a lot of them that during the bull market, they struggle and they suffer, even with the ordinals dropping on Bitcoin. You had the network slowing down. Stuff was, transactions were getting delayed a lot. How do these legacy systems actually scale, to, like you said, if we're going to see that increase of adoption and more people coming in, how does Bitcoin scale up? How does Ethereum scale up? Solana scale up to actually handle the real workload that I would say is actually out there?
Look, I think that is the 64. And, in Bitcoin's case, it's not going to happen at the layer. It's just not, right? That's not its design. It's designed to be slow, but very secure, super secure, 0 failed transactions, 0 mistakes, 0 hacks, right? I mean, it's the most secure computing platform maybe on the planet, but it's not fast and it's never going to be fast. So you're going to have to scale that with Lightning or L2s or L3s or even L4s at some point. And it's all going to get developed. And we're investing in companies that are trying to do that. And I think that's very interesting. In Solana's case, so what happened is a lot of people just like bitched at me, right? Oh, you're an idiot. You're dead to me. You shouldn't even be allowed to talk about this. I'm like, well, okay, that's not helpful. Tell me why I'm wrong. I said, I'm happy to be wrong. Tell me why I'm wrong. Educate me. And I had one guy from the Netherlands actually say, hey, I'll set up a Zoom and I'll walk you through some stuff. And it was cool. He actually bought Yusko.sol and gave it to me because someone's squatting on markyusko.sol. I'm like, what the hell? Who took my name? But whoever has it, I'm not buying it from you. So, you could give it to me, but I'm not buying it from you. I guess I would pay him what him or her bought it for, but I'm not going to pay a bunch of money for my name. I don't really care. But it was cool. I mean, he did a really good job walking me through where the problems were, how things have gotten better, where there's some really new things that are being built, and showed me some stuff from a payments perspective that was amazing. I mean, it was truly amazing. And then he's like, hey, and I talked to the guys and they'll let you come to break as a guest. I'm like, you know what? I might do it. Now, me hanging with young gals in the Netherlands, probably not good for my health. But I think it could be a really interesting thing. But so my point there is, am I still?
Yeah, you still here. We might have lost him.
So what's cool is somebody Algorand on. I would love to do that. So I actually works. Going to update. But I think that's going to we'll do the same thing on kind of getting me more around. But dialogue, debate,
Man, the technical difficulties on this one are extraordinary.
Yeah. I didn't catch that last part, Mark.
Mark, if you disconnect the virtual background, you
Oh, I
might have
said education, dialogue is just way better than somebody. So I was saying that someone is setting up a session for me, and I should remember his last name, but I'm bad with names. Who's in the algo family, and so we're going to do that at some point.
Yeah, I think I heard what you were saying there with me mentioning meeting with John Woods. I definitely think if you're going to talk to anybody in the Algorand sphere and in the influence of Algorand to talk about the tech and what Algorand is doing, there's no better person than John Woods. He definitely knows his stuff, and he's honestly, I think, one of the lifelines for Algorand in this bear market to help it really get to where I would hope it needs to be. Coming in the next 6 months, especially with incentivizing nodes, the one-click node, Python being now on Algorand. Like there's a lot of updates that, it didn't have previously that I think John's definitely put a lot of work to getting to.
Yeah, Mark, do you want to repeat a little bit about what you did say on Algorand so the audience can hear that part again?
We might have lost him.
Yeah, we might have. Looks like he's frozen. Let's see.
All right. Mark, I pulled you off screen for just a short while, but if you can hear us, if you remove the virtual background, you might have a better connection because those do take up a lot of GPU. And we lost him. So hopefully he's going to try to reconnect. Hopefully my internet doesn't go out again. This episode has been a lot of fun. We might have to get this one rescheduled and try again. But fortunately, we are recording all of these locally. So when we put out the clips, everything will sound fine. No internet connections will really matter there. But thanks for sticking around, everybody in the live audience. How's everyone doing? Give us a thumbs up for the support through the technical difficulties. We definitely need it in these hard times. But yeah, let us know what you're thinking about in the comments. We'll react to some of that while we wait for Mark to come back.
Yeah, we could go ahead and kind of break down some of the, topics that we had. I mean, I feel like biggest news that, one of the questions I wanted to ask him was going to be, he talks about the, fall being the best time for Bitcoin and like, when that's going to come and, the halving and all this stuff.
October.
Yeah. October. But well, I don't think he's talking about the fall as in like maybe time front or maybe our time, but like the crypto cycles. But
I got you.
Regardless, what is actually going to bring about, the actual price, moving up other than maybe just straight, people manipulating it and buying it more. I know that he was on the Paul Barron network talking about 300 billion, right, coming into algo once these ETF gets approved. He was saying
algo or crypto?
You meant Bitcoin?
Into Bitcoin. He was saying that 1%, even if 1% of, all of these hedge funds, right, all these massive players, they have so much in trillions of value that's going to be coming in that, 300 billion could be going into Bitcoin, and that could cause it. And obviously he's back now, so I could let him speak to a little bit of that. But what are your is that your main thought around why the price of Bitcoin will run up? And on the counter side of that, is there a fear that once these ETFs get approved, that it could be at least bad for the price of Bitcoin because then it could be shorted and there could be other, adverse effects with these ETFs getting approved?
No, great question. So, and again, I apologize for all the technical difficulties. It's just insane. Okay. And I'm calling out the MGM Park. This is insane. You make so much money.
Well, you're solid. You're solid right now, and I feel like it's the best we've had. So let's roll.
Right, we got to run with it.
Well, yeah. I changed to Verizon. I have two phones, Verizon phone and AT&T phone. So I turned off the AT&T phone and I tried Verizon. So we'll see what happens. But again, apologies. So look, I'm super excited about talking to John Wood. Thank you. And learning, kind of more about what's going on in the algo space. And why does that matter, right? Because there's all of these platforms that are building in the ecosystem. And we're about to enter this really bullish period again. And why is that? Well, it's partly due with the halving, but partly with these ETFs. And the ETF, the question about aren't the ETFs potentially bad? No, the bad ones have already been created, right? you can go back and look at the day of the peak in November.
Talk about the futures ones, right?
Right? The futures. Because what a futures ETF does, they're not good. They're evil, right? Why are they evil? Well, futures markets allow you to create any commodity out of thin air. Right? So it's not just Bitcoin futures. It's commodity futures, gold futures, oil futures. And what happens is big institutions are not allowed to go naked short. Right? You can't go naked short stocks. It's against the law. You can't go naked short bonds. It's against the law. But you can go naked short in the futures market. And nobody gets in trouble. Nobody stops you. And so you look at the price of gold. The price of gold's been dead flat for the last 3 years. You think about it, that's not possible because gold isn't priced in gold. Gold is priced in dollars.
Yeah.
And we devalued the currency 50%, which you see that in everything, price of houses, price of food. So we know that the currency got devalued, right? Bitcoin's up 100% over that same period because we priced Bitcoin not in Bitcoin, in dollars. So Bitcoin per dollar went up, but gold didn't. Why didn't gold go up? Well, because JP Morgan and all these big institutions can spoof the price of gold through the futures market and short the shit out of it, technical term. And so these futures things are terrible. So, Bitcoin was in a bull market and they approved the Bitcoin future. And what happened? Everybody on the big side, as part of what I'll call Operation Choke Point, which I believe was an intentional designed plan to push down the price of Bitcoin and all the other digital assets, basically foment fear. And even, you want to go deeper, it's to foment fear, not just in crypto, but in the banking system as a whole, right? And Janet Yellen come out and say, well, if we can't trust the banking system with the SVB thing, maybe you should put all your money with me at the Fed. You fucking kidding me? Seriously? CBDC, you want us to give you our money. So it's bad enough it's in a bank, right? It's the bank's money, not your money. But at least the banks, there's been 800 years of trust that works. But the central bank, NFW, no, just no way am I giving them my money so that they could then control it and tell me when I could spend it, if I could spend it. And if they don't like what I say on Twitter, they can turn it off. That's a dystopian nightmare that I have no interest in. But that was their plan, right? It was to create this fear in the financial services system so that they can introduce this control mechanism and surveillance tool. Well, let's go back to Bitcoin and ETFs. So now what we're talking about is this approval of a spot ETF. Well, a spot ETF does two things. One, it actually increases demand for the physical commodity. That's important. So more demand, fixed supply, price goes up, right? That's just math. The other thing it does is it unlocks $30 trillion of money controlled by RIAs, boomer people that don't like this stuff. These are all Ponzi schemes. They're not real. And so UBS and Merrill Lynch and Morgan Stanley and all these firms have said, no, you can't buy anything related to crypto. Well, here's the thing. When BlackRock's ETF gets approved, and that's the one that's going to get approved, trust me, when that gets approved, all those firms can no longer say no. Like right now at UBS, right? I call it the family harmony account with my brother-in-law. I've asked him, can I buy GBTC? Nope. Can I buy, Marathon Mining? Nope. Can I buy, nope, nothing. Well, when BlackRock ETF happens, they won't be able to stop. So that's going to unleash all this money. Now it's not all going into Bitcoin, but let's say 10 basis points. That's 30 billion. 1% would be 300 billion. If 300 billion goes into an asset where it's got a $500 billion market cap, but that's not the key. Only about 100 billion is free float. The other 400 billion is lost, stolen, hodl, whatever, Satoshi. You're talking 100 billion of free float. You had 300 billion, price is going up a lot.
Yeah, mood.
Okay. And then there will be spillover effects as people say, oh, we're back in a bull market. So now I can go look at these other projects and I can see, are they solving things that I need in my life? And maybe I want to own those too. You couple that with the halving, right? The halving. So if the fair value of the Bitcoin blockchain today is 50K, now how do you get that number? Well, Tim Peterson calculates it. I kind of calculate it using Metcalfe's law, but he has a really good model that does it to the dollar. And it's somewhere in the low 50s, but I'm just call it 50. So if that's fair value, and we're 27 today, 27, 28, whatever. So then it's below fair value. Mm-hmm. Well, I'm an investor. Anyone who's an investor says, I like to buy things when they're on sale. It's kind of funny. The rest of the world, things go on sale in investing, they run out of the store.
Yep.
It's just bizarre. It's crazy. And yet, I joke, you put wedding dresses on sale, people kill each other to get in the store to buy them, right? They'll trample each other. But you put a good asset like Bitcoin on sale and people run out of the store. So I'm accumulating here. But more importantly, as we get closer to that 50K, the halving is going to occur, April next year. Well, that's going to increase the fair value to 100K. No, that's stupid. No, why would it do that? Well, think about it. Again, if the block rewards get cut in half, the price has got to rise in order for the miners to stay solvent. Yep. And so there's this built-in mechanism to revalue the price. And if you look at every halving in history, it's added to zero. The total value of the network has gone up tenfold. So we went from 10 to 100, 100 to 1,000, 1,000 to 10,000. This one's 10,000 to 100,000. But we don't stop at fair value, right? Because in a bull market, you go through fair value. And this is the parabolic part of crypto fall. So as I said, winter's long over. We got through spring, survived it. A lot of volatility. Hurricane Sam, came and we survived that. Now we're in crypto summer, and summer is slow drift up toward fair value. And then next year, starting in June, that June to June, that crypto fall post halving, how high could we go? Depends on how much leverage is in the system. So,
and I guess how do you think that a lot of the other things, because the last time that Bitcoin's had its halving, there's been a lot of QE rates going down. The macro, at least for the United States and for most of the world, has been a lot different. Right now most charts, especially when you look at treasuries, bonds, the market, and all this stuff is pointing to a recession, right? It's pointing that next year is very likely we're in a recession or on the, verge of one. Do you see, how can Bitcoin achieve that, doubling of price in, the midst of a possible recession?
Well, no, a great question. Fantastic question. But again, the potential for recession is the result of the withdrawal of liquidity by the central banks, right? So the expansion that we had that drove, the QE era and drove the devaluation of the currency, particularly post the lockdowns in 2020, you doubled the money supply. So it was logical that assets denominated in dollars were going to rise. So real estate, crypto, other commodities, food, everything denominated in toilet paper went up. And the more you devalue a currency, the worse it is. Well, but then they started to unwind that. The Fed actually raised rates. They actually bought back bonds sold bonds, and they decreased their balance sheet. Well, we had negative money supply growth in the United States for the first time in 100 years. Think about that. For 100 years, we devalued the currency. We sold people this bill of goods that inflation's good for you. On what freaking planet is taking my purchasing power away by stealing it through inflation. Good for me.
Yeah, speaking on like inflation, right? I'm seeing I like to shop at Costco, and I've been watching more like videos, right? Shout out to Costco. I like the stock too, but Costco, all the prices are increasing, and this is bulk supposed to be a more affordable. And then we see, as you mentioned, the money supply in 100 years, you said decreasing, right? Or isn't producing
First
as
time.
much. First time, yeah. And then in 17 years or 16, 17 years, we know like the T-bills, treasury bonds are paying the highest ever. So that's making more people go to cash. And what do you see with the market? Just mentioning back to like Costco, if the regular retail investor is struggling, highest credit card debts, highest mortgage, everything's at all-time high. Where do you see the common average person at in regards to investing in crypto, Bitcoin, and whatnot?
Look, it's a great question, right? I mean, if you're struggling to make rent because rents are skyrocketing, you're struggling to buy food because food prices are rising, you're probably not going to save as much, and you're probably not going to invest as much. Definitely true. But here's the thing: that ETF, while it'll be available to everyone, and the average investor could buy 10 Satoshis. You don't have to buy a whole Bitcoin. That's the fallacy, right? You can buy as much or as little as you want of any protocol. And so, but that ETF is really targeting the all-seeing eye people, right? The top 1%.
Yep.
And they're the richest they've ever been.
Yep.
Super rich. And these Merrill Lynch accounts, these boomer retirement accounts, they're flush, and they're gonna put 1%. Because here's the thing: is it's 0.0 correlated to bonds, and it's 0.15 correlated to stocks. It's the perfect diversifier for your portfolio. So when you add Bitcoin to a diversified portfolio of stocks and bonds, the risk of your portfolio goes down, not up. So even though it's got high volatility, it's got 80 vol, that volatility is uncorrelated with the volatility of other assets. And so if you had taken 1% 5 years ago and put it in Bitcoin and took it at 0.5% from stocks, 0.5% from bonds, your portfolio actually would have outperformed by 250 basis points per year. Through the ups, through the downs, all of it, 250 basis points per year with less vol. Now, if you're going back all the way for 10 years, it's even better. And if you'd done 2% or 3%, it's stupid in a hurry. And the law of large numbers says that a $500 billion asset is not going to be as huge upside as a $100 billion asset. It's kind of like Amazon, right? Amazon's compounded at 41% for 27 years. It's pretty amazing, right? But it compounded way faster when it was smaller than when it was bigger. That's just the law of large numbers. And it has the same volatility as Bitcoin. This is the funny thing about Amazon. Everyone owns Amazon. Every single person owns Amazon. In an index fund, in your Robinhood account, everyone owns Amazon. It's a good company. When was the right time to sell Amazon? Never. But who actually bought it 27 years ago and held it to today? No one, right? Because the volatility is so big every year, every single year, 27 years, every single one, double-digit drawdown, average 31%. So every year, on average, you lose 31% of your money. So what does the average person do? They've got it, it gets drawn down, and they sell it. And then it goes up, and they buy it back. Like, why didn't you just hold it the whole time? I mean,
that's market psychology at play right there.
Yeah, buy high, sell low. That's what that book I read. That's what it said. Buy high, sell low.
Buy high, sell low. It's actually, it's a scary thing about humans, right? We buy what we wish we would have bought. When the pain gets so bad, like, when did the average person buy Bitcoin? Not at 11,000 or 10,000. They bought it at 69,000, 67,000. And look, over time, what's going to happen is this recession. So back to this recession thing. The reason the recession and what Sewell was describing at Costco is so important. Those are the result of the withdrawal of liquidity, right? That's what the Fed has done since its inception in 1913, it controls the economic cycle by pushing liquidity in and expanding the economy, or withdrawing liquidity and contracting the economy, so it doesn't overheat. Now, what overheating, right? We're barely at 2% growth. The average person doesn't have $500 to pay an emergency. There's no overheating. It's simply about command and control, and again, concentrating the wealth at the tippy top through devaluation of currency. So what's likely to happen is, with the tailwind of the halving and the tailwind of the ETF approval, if a recession actually happens and the average person is really struggling, what are they going to do? They're going to cut rates and give out free money again. We're going to be talking about, universal basic income again. We're going to be talking about handouts. Oh, wait, there's an election coming up. We're going to be talking about forgiving student loans again. We're going to be talking about, giving you rent subsidies, or what they did in California, where they sent you a check for gas, right? They literally sent you a check to buy gas. I mean, so buying votes is going to become very popular. And that stimulus, some of it will go to pay bills, but some of it will leak into markets. But the real driver in the short run isn't the average person, which, I think it's interesting. Like, I'm sitting here in Vegas, and I'm walking around last night, and I'm not a big gambler. I don't love Vegas, but I think it's a cool place to come. But watching, if you were walking around the lobby, there's no recession. People were spending
like Beyonce tickets go for like $3,000, Taylor Swift.
Yeah.
So
oh my God. But then I'm thinking, well, here's a crazy stat. I learned this yesterday from someone here. They have a slots tournament, and the buy-in for the slots tournament, like, slots tournament, there's no skill in slots. A poker tournament I get, right? Maybe a blackjack tournament I kind of get, still not a lot of skill. But a slots tournament, what the hell? $30,000 buy-in. You know what the average income of the person in that tournament was?
Probably 50K.
75K.
75.
Not surprising at all.
That's
half a year's income.
Yeah.
Now, I guess the way it works in a slots tournament is all the money goes in, and then if you get out right away, it's like a poker tournament, you get a little bit back. And the longer you survive, you don't lose it all. But here's the thing, this is what they said. You don't lose it all in the tournament. But what happens is they hold the tournament from 3 to 8. Well, guess what you do the rest of the time?
You can't
lose
the rest of that money. Right.
Yes.
Mark, I want to ask you what you think the Fed's going to do at the next meeting. But before we do that, I'm going to jump into a quick little shout out to our sponsors and ad break. Then we'll go from there. So, for all of you that know, we have some great sponsors, including Examarket. Examarket is a fantastic NFT platform where you can buy, sell, trade NFTs. You can head on over to Exa, that's exa.market.com, to do just that. And now, a quick word from our sponsors. And we are back. Awesome.
That is like watching the Notre Dame pump up video from this last weekend. Those were so good. No, if you haven't seen it, they did a pump up video post the Duke game, and they had the live feed of the coaches talking, and it was so good. It was like I would run through a wall after watching that thing. I would run through a wall after watching those two ads because the quality is great, the messaging is great, the participants are real people. The brain power that's coming into this space, the fact that these companies, not all of them are going to survive and not all of them are going to be huge home runs, but this technology is not going away. This is the funny part.
Right? Yeah. They're just building, especially if it's in the bear market.
Well, this feels so much. I know you guys some of you were born, I think, but in 2001 and 2. So
young do you think we are, Mark?
Yeah, I'm 30, so
I'm barely.
What? I wasn't investing in 2001 though. Let's be straight.
But
no investors, no.
Yeah, but here's the thing: in 2002, you've seen the cover story of Pets.com, and it was the little sock puppet, run over with, and it was like, oh, the internet's dead, and this stuff's never gonna. And Mark Andreessen, was a pretty smart guy. He had this great line. He said, all those ideas are right. Okay, they're just early, and early actually is a euphemism for wrong, right? If you're early, you're dead. But Pets.com and Chewy.com are the same company. So yeah, the people in Pets.com lost their money, but Chewy.com realized the vision. And Webvan went out of business, but Amazon, Whole Foods business is the same business, delivering groceries. So I'm not saying that every one of these companies is going to be a huge winner, but the concepts and the constructs are, and the technology is going to work. Oracles are going to be a thing. I mean, the idea that suddenly we're going to go back to the old days is just kind of funny. And I love that one of the thing was plane flights, right? You think about how Expedia and Kayak and all these things work today. They're totally fine. They're way better than the old days. Again, this is really old, like in the 70s and 80s. You had to physically go to the travel
agent
there, and
that's officially before our time.
Yes, I never done that.
Yeah, but these things are going to be totally disrupted by this on-chain kind of blockchain-driven model, and staking, right? I mean, the idea that your money sits idle because you just don't pay attention to it, or you're too busy doing your job or earning your money to do stuff, and have it be automatic and not be the stupid stuff like, oh, make 1,000%, ARR. That's just dumb, right? But a legitimate, So I just love the fact that those were high quality, real businesses, and the messaging is that this is no different than watching a video on a bank or a brokerage firm or an insurance company.
Yeah.
But all of those legacy businesses adapt or die. That's for sure.
And I definitely think once you have that talk with John Woods and you start checking out the Algorand ecosystem more, I think you'll like some of the things you see that are building. I mean, obviously, the bear market's been tough on every ecosystem, but Algorand, I feel, is one of the spots where TVL is still increasing. People are still here, and I think it's gonna. I think the next bull run, I think it'll have enough built on the base to flex some of that strength, and that's the hope.
Yeah, that's like projects like TravelX is a huge one. You should look into that one, but they're trying to revolutionize the travel industry using NFTs and being easily able to transfer tickets and reorder. It's amazing. But yeah, Algorand is definitely something to watch in this next bull run.
Yeah. Well, to that point, think about then integrating AI in there and being able to say, you know what? Give me an option to fly between these times to this city, and I want to stay kind of in this neighborhood, and I want to go to these 3 shows. And it comes back with options and say, I like that. I like that. I like, okay, go find me something else. And then,
well, you know what? It made me think, sorry, Mark, but flexibility, I think, especially for this new generation, that's what this technology is going to provide. But go ahead.
no, it's tools, computing power and tools. And we refer to this is how we invest out of Morgan Creek Digital is the ABCDs of the digital age. And basically A, B, and C are all about the D, right? And D is data. Data is everywhere and it's growing exponentially rapidly. The amount of data that's created. Here's a crazy stat. From the beginning of time, it's a long time, to 2003, there were 5 exabytes of data created. Okay. Today, and we're helping to be part of it, today, 330 terabytes of data will be created in one day. So that difference, and that difference is accelerating with AI. So the ABCDs are AI, blockchain, chips, and data. Everything's about data, capturing the data, analyzing the data, acting on the data.
And selling the data.
Well, and selling it. But,
like
but what all a blockchain really is a better way to organize and capture data. Right? That's a good database. A permanent.
Transfer it fast. Especially for like the bank. I mean, I literally just went through this past week. My wife is a hairstylist. She uses a business called Novo to move money from our bank to this other bank so that she can then pay her rent for where she does, where she cuts hair. Yeah. They closed our account without us even knowing. Didn't send us an email, didn't send us nothing. So we sent money, right, like we've been doing for the past year, to that account, which is with a bank, savings bank up in, I think, New Jersey or Boston. But obviously, then had to go through figure out what's going to happen. It took 5 whole days for that money to get back to us because I had to go through all the clearinghouse, and there was a weekend. Thankfully, it wasn't this coming weekend where it's a holiday, because then it would be even longer. But it's like that data and that the movement of money, the movement of value has to be so much faster. And I feel like, because our attention spans, people's attention spans are getting less and less and less. Like they don't want to wait, 5 days to do something.
It's that, but it's also the sovereignty of it.
Right.
My freaking money, your freaking money, your wife's freaking money. It ain't the bank's money. But in the system that we have, the trust system, it's theirs. Right? It's theirs. And they can do with it what they will. I tell a story all the time. The first time I tried to transfer money to Coinbase, Bank of America said, 14 days. Like, what do you mean 14 days? Like, didn't you read the fine print? I'm like, of course I didn't read the fine print. And they're like, well, we get to do that if we want to. I said, well, that's ridiculous, but okay. But it's because it's their money. And in a sovereign world facilitated by blockchain, we get to control when we move it, how we move it. And so
I still think, though, that's the big hurdle, though, because even in the space that we've seen, there's so many hacks. There's so many, and not even hacks, but just like the pressure that puts on the average user to actually custody their own assets and to actually take care of their own identity versus like, I just feel like what we're going to see is, the whole DeFi space, right? Decentralized finance. It's not, most things are not truly decentralized. They're masquerading as DeFi, but they're really trying to be the banks for blockchain. I think what ultimately will have to happen is there's going to be the banks. They're just going to move onto blockchain because the average person,
CPI, right?
Yeah, exactly.
And I'm okay with parts of that, but at the end, there are ways to have meaningful amounts of capital, outside the kind of 1, 2, 3, 5, 10% of the FU money, the run-in money that we put in Bitcoin or whatever. It used to be in gold bricks or silver bars or whatever, diamonds. Now it's in Bitcoin or something like it. Beyond that, stable coins are going to be monstrous, right? Because I can send you a stable coin right now using lots of different systems immediately. And I, are there issues there in terms of somebody is centrally controlling that, making sure the dollars are there? Yeah, but I'm okay with that because it's a better system. And then clearly we're a ways away from the full sovereignty. And look, the incumbents aren't going to let it happen. They're going to fight it tooth and nail because they've had a good 800-year run. I mean, think about the number for a second. It's $7 trillion every single year comes out of our pockets into theirs. Banks, brokers, insurance, accountants, auditors. Like, why do I need, you'll love this. So we have a foundation associated with Morgan Creek, and 10% of our profits go in the foundation, and we give grants. And my wife took over, the woman who was doing it retired. My wife took over, and my wife is amazing in so many ways, but mostly she's just the most focused, laser focused, detail oriented person. And I can't spell the word detail. So we're like a perfect match. And she found that we're being charged $90 a month for a long time for a business accounting report. I'm like, what report? I've never seen a report. Never. Well, you have to have that. I'm like, well, so she's like going at these guys. Why do I have to have it? You don't send me anything. Well, we prepare it. You just never asked for it. I'm like, what? I don't need your accounting for my cash. I can read the statement myself. I'm good. And she got it reversed. Now, she didn't get us the 13 years of back that, we never should have paid. But that's just theft, right? Wow. And that's like overdraft fees and all the other fees that banks take. Mm-hmm. When they cross the line into things that we don't really need, that's true theft, right? You charge
Wells Fargo was doing that to me. They were sneaking money out of my account for like 12 months, and I didn't notice it. And then I called them, and it was an error or some crap, And then
an error. Yeah.
Yeah. And I definitely agree that we'll see this, there are certain nations and certain countries that will definitely want this. They want this technology way more than the US, than maybe people in the US do, because most of my friends, like you said, you're in Vegas, right? Everybody's comfortable. They're not stressed. Like even though we're on the verge of, possibly one of the biggest recessions and the housing market collapsing, and there's so many things that could be going on, people are still comfortable with the way things are here. But it's not that way in a lot of other places around the world where
I'm being in Buenos Aires right now.
Yeah, exactly.
I'll say it's about to be. Yeah.
The reason Milei is going to win, right, is because the average person, they're not dealing with 6% inflation or 3% inflation. They're dealing with 118% inflation. And Wences Casares, I don't know if you know that name, but Wences was one of the earliest Bitcoiners. He founded the firm Zappo, which is kind of like the Fort Knox for early hodlers. And he's from Argentina. And he gives this talk, and I'm sure it's easy to find on the internet, and it's so compelling, and everyone needs to see it, because he talks about growing up where the government stole his family's wealth, not once, not twice, 3 times. Through, quadrigit inflation and dictators basically stealing the population's wealth and making themselves, fabulously wealthy. And people forget, at the turn of the century, Argentina was the 3rd most prosperous country in the world.
Wow.
Number 3. Today, they're an emerging market, run by a dictator and 100% inflation. Now, I love BA. I mean, I think it's fantastic. And, parts of Argentina are just truly dazzling. But as a failed state because of manipulation of fiat through just bad policies and corruption. And do digital assets and blockchain and AI and computing fix that? Yeah, not tomorrow. But over time, it absolutely does. And I think your point's really well taken. Does my life change that much if I can get my money, tonight when the bank is closed versus wait until tomorrow? Not really. If I'm in Venezuela and I can't get food, right, because they've devalued the currency 99.9999%, yeah, having transferred some into Bitcoin or Dash or Monero or whatever, I mean, incredible.
Yep. Yeah, absolutely. Absolutely. So we're coming up on the top of the hour. This episode's been an interesting ride with a lot of technical difficulties throughout it. But Mark, this has been really fun. I do think we should have you on again sometime soon to try to get a couple more questions asked. I do want to, there was one question I wanted to ask right after the ad break that I do want to be sure I still ask, and that is about the Fed interest rates. You know, we were talking about how eventually it's got to happen at some point. They're going to come back down. But I'm looking at the CME FedWatch tool right now, and there's a prediction of at least 20% certainty. So not a strong, it's not strong confidence, but still 20% likelihood that they could raise it another 25 basis points in the next meeting. Where do we see these interest rates peaking at? Like how long do we have to wait before the Fed is, sort of back on our side? I suppose.
Look, I'm happy to come back and do it when I'm back in the land of internet, and not a B-class hotel. No, I'm just kidding.
I was saying here, my internet's been out too. There's local outages, which has not been great.
But here's the thing. What the Fed does is very different than the real interest rate problem. The Fed controls the Fed funds rate. Mm-hmm. And I don't know about y'all, but I've never been able to borrow at Fed funds. It just doesn't work that way.
Never.
The banks get to borrow at Fed funds, and they borrow at Fed funds, and then they buy treasuries and they arb the spread. And that was a perfect game until they lost control of the long end. So now what's happened is all those banks that borrowed at zero and bought those 3% treasuries are now sitting on massive losses, like bankruptcy type losses. Mm-hmm. And there's a whole bunch of corporates are sitting on losses. And what we've seen in the last couple of months is long rates surging. And so the short rate, whether he's crazy enough to raise it another 25 basis points to try to increase the NIMs, the net interest margins that the banks make, because they're still not paying much on deposits. He might, but that's all about enriching the banks. Remember the Fed's job. The Fed's job is not to help us. The Fed's job is not to be some, goody two-shoes. The Fed's job is to make banks rich. That's their job. It's always been their job, from the first one in the Netherlands in 1607 to the Bank of England to, the Fed in 1913. And they're damn good at it. They're damn good at it. And the way I judge that is how fast the currency devalues. We're down 98% since 1913. So they're damn good at it.
Yeah, they're great.
And so it sucks for the average person, but we get through it. And the issue that's real, the loss of control on the long end, because the problem is when rates were zero, some doofus, technical term, in the government didn't lock in 30-year bonds at zero. They kept financing short. So now they've got this massive debt burden. I think total government debt went up by $1 trillion last week. Like, I think that number's right. $1 trillion. It took probably 100 years to get the first trillion, and now we did it in a week. And so that crazy level of spending, the money laundering that's going on in Ukraine, and just the absolute insanity of running a multi-trillion-dollar deficit in times of prosperity. Like, if you're in a recession or depression, run a deficit. But when we had the Clinton expansion, we actually got to surplus for the first time in 50 years. So this is crazy.
Yeah,
and
the numbers are so blown out now, people can't even make heads or tails of it. Like
it's crazy,
people can't even comprehend that large of a number.
But the real problem is the interest that you have to pay on that amount of debt is starting to chew up a huge portion of the budget. And as tax receipts go down and your interest costs go up, now your deficit's getting worse. So the problem gets worse. But here's the real problem. Crazy. If the buyers of the bonds lose faith that they're going to get paid back, they demand higher rates. So there's a chance for a super spike. And that would cause, the TLT, the long-term bond index, is already down 50%. These are long-term government safe bonds, down 50. You've lost half your value. And if we have this super spike because people are afraid to buy bonds because interest rates are rising, that could get ugly. Now, again, that's the long end. I think the short end, where they raise 25 basis points or not, I think it just doesn't matter at all. And I think by this time next year, they'll be facing this question of whether they have to cut again to stimulate the economy. Because even with all of the stimulus that they created in the QE era, we're still only growing 2%.
You're right. This feels like an overcorrection. You know, when you're driving, your wheel turns and you try to swerve to go back the other way, but then you got to swerve again, right? That's why I feel like where we're at with the Fed right now. They don't know how to,
they're swerving until they hit that tree and the engine comes flying through the front.
Yeah, that's what it is.
They're the perfect example of what's called the dentist wrap phenomenon. It's why collectible Porsches are the best investment you could ever make. Because the dentist, and that's pejoratively, the dentist buys the Porsche. They don't know how to drive it. And no one told them that you should never hit your accelerator when the wheel is not straight. If your wheel is turned, never accelerate. Okay? It's just simple. Think of a string tied between your accelerator pedal and the bottom of your steering wheel, right? If you're turned, you cannot hit the accelerator. And they wrap the car around the tree. End of Porsche, and so the small number that become collectible get worth a lot. And that's exactly what's happening is they're doing the overcorrection. They're still going to hit the telephone pole. And that's inevitable because the dentist should not have been driving the Porsche to begin with. And apologies this out there.
Yeah, and I feel like however this Porsche does wrap around the tree, when QE and when the Fed, I guess, actually does acknowledge that they did way too much damage, it's going to be one of those too little, too late, and the money that's going to get printed and flowed into the market to try to save it is going to be astronomical. Is what I would say is going to happen.
Well, and that's when we get the spectacular blow off top. But remember, that's not the Bitcoin or ETH or Algo or anything else is getting better. It's the money's getting worse. You just got to always remember that one algo is equal one algo, one Bitcoin's one Bitcoin. It's the money's getting worse.
Yeah, $1 is not $1.
And so to protect ourselves, we want to own some of our wealth in these assets that are priced in the devaluing currency. All right, guys, this has been fun. I apologize for the technical difficulties.
No, that's totally okay.
Thank you, Mark.
Totally okay. We're going to throw an outro video out, and if you could just stick around for a couple minutes. Everybody, like and subscribe. Go show Mark some love. Follow him on Twitter. Where else can they find you? MorganCreekCapital.com. Is that the website?
MorganCreekCap.com. At Mark Yusko, MarkYusko. I'm all over.
Just type in his name, you'll find him.
You'll find him. Absolutely. Well, we appreciate it.
There are not a lot of Mark Yuskos. I think there's actually one other. And actually, I met the third other Yusko in person 2 weekends ago up at Notre Dame. So,
wow.
There you go.
That was kind of fun.
Rare name.
Really interesting. All right, Mark, stick around for just 1 minute. And everybody, hopefully we will catch you next week for our next week's show. Take care, everyone.